While the rest of the market has been selling off this week, one small biotech company has been quietly sitting at half the price Wall Street thinks it's worth. And the thing that makes this one interesting isn't future potential, it's that the money is already coming in. I'm talking about BioCryst Pharmaceuticals, or ticker BCRX. The analyst consensus price target right now is right around $20 a share. Stock is trading near 950. That's over 100% implied upside from a company that generated $600 million in revenue last year and is already profitable. Let's break down exactly why that gap exists, what would need to happen to close it, and what could go wrong. BioCryst is a rare disease biotech based in Durham, North Carolina. Their flagship product is called ORLADEYO, a oral once daily pill for hereditary angioedema, HAE for short. If you are not familiar with HAE, here's what you need to understand. It's a rare genetic disorder where patients experience sudden, unpredictable swelling attacks. These attacks can attack their face, their throat, and their limbs. These attacks are debilitating and, in severe cases, life-threatening. And until ORLADEYO came along, the main options were injectable treatments that patients had to schedule every week or two. ORLADEYO changed that. You take a pill every day and the attacks are prevented. For a patient whose life was previously organized around injection schedules, this is a fundamental quality of life shift. And the market has responded. Full year 2025 ORLADEYO revenue hit $601.8 million, up 38% year over year. When you exclude the European business they sold in October, growth was actually 43%. Non-GAAP operating profit for the year reached $214 million, a 198% increase from the prior year, nearly triple. This company is not burning cash hoping something works. It already works. On January 23rd of this year, BioCryst completed its acquisition of Astria Therapeutics for $250 million plus milestones. And with that deal came the most important asset in the company's history, Navenbart. Navenbart is a monoclonal antibody for HAE, the same condition ORLADEYO treats, but through a completely different mechanism. Where ORLADEYO is an oral pill taken daily, Navenbart is an injectable given every 4 to 8 weeks. By having both, BioCryst now owns both lanes of the prophylactic HAE market simultaneously. And the clinical data on Navenbart is exceptional. Phase 3 trial data shows mean attack rate reductions of over 90%, median reductions of 97%. These numbers are among the best ever seen for any HAE treatment in clinical history. That's not marketing, that's what the trial data shows. Management is now guiding for 625 to 645 million in ORLADEYO revenue for 2026. Continued growth off an already massive base, and they've outlined a path to 1 billion in peak ORLADEYO revenue alone before Navenbart generates a single dollar. Here's the layer that doesn't get enough attention. BioCryst is also developing BCX 17725 for Netherton syndrome, an extremely rare, severe genetic skin disorder with no current approved treatment. BCX 17725 is a KLK5 inhibitor, targeting the specific enzyme that drives the skin damage at the molecular level. It's potentially the first-in-class targeted therapy for this disease. Part 3 of the Phase 1 study involving actual Netherton syndrome patients is underway right now. Data from Part 4 is expected by year-end 2026. If it reads out positively, BioCryst moves into a pivotal study in 2027 and is a second potential blockbuster asset on top of an already proven franchise. So why is the stock still at $9.50 a share? There's a few real reasons. The acquisition was dilutive. BioCryst issued equity to help fund the Astria deal, which pressures the stock short term regardless of how good the deal is. Rising R&D expenses from late-stage Navenbart trials mean 2026 operating costs are going up before the revenue benefit fully materializes. And the HAE market has real competition. Tadaka, CSL, Bering, and others have their own drugs. And then there's the history. BCRX has had periods of excitement before. Stock has run up and come back down. Some investors have been burned waiting. And that history creates reluctance to re engage. So, what are analysts actually saying? Well, there's 12 analysts that cover BioCryst. The consensus tends to be that it is a strong buy right now, with 36 having it as a strong buy, 55% having it as a buy, and 9% saying to hold, while 0 are saying to sell. The average target is approximately 20 to 21 per share. Wedbush recently raised their target to 22 from 21. Evercore ISL has a $17 target with an outperform rating. The high end is $32. At $20 per share, you're still looking at a modest multiple for a profitable rare disease franchise. With a second pipeline drug in late stage development, the math is not unreasonable. If phase 3 disappoints or safety signals emerge in a larger patient population, the Navenbart thesis collapses, and the 250 million Astria acquisition looks like a mistake. ORLADEYO also isn't immune to competition. If a competitor shows meaningful better efficacy or tolerability, prescribers start switching and running a late stage trial, integrating an acquisition, advancing a second pipeline asset, and sustaining commercial momentum simultaneously is a lot happening at once. BioCryst has cleared the bar most biotechs never pass. They have real revenue, real profits, a drug that's growing, and now a late stage injectable with trial data that's among the best ever seen in this disease. The question isn't whether the company survives. It generates over 200 million in operating profit. The question is whether Navenbart turns a good company into a dominant one, and whether the market will price that possibility before it becomes a certainty. So the question is, does a profitable company with a drug growing 38% annually and a second potential blockbuster in late stage trials really deserve to trade at half of what every analyst says it's worth? Drop your answers below. And as always, remember, this is analysis, not financial advice. Please do your own research.